Hey everyone, this is just a quick weekly review for the week of 16th to the 20th of October 2023. We're pretty much wrapping up the third week of October. Obviously, a few things to talk about. We've been talking about oil and gold, and this is the main focus for us for this week, and that's pretty much it. This is gold currently, and you can see where we are right now at time of recording. We are pretty much at 1985. We have touched 1985. We're currently about 1984. And you can see on the high here, the main focus here, again, it is obviously 127.2% of the Fibonacci extension from the 20th of September to the 6th of October. But the 1985 level is very special because it's $15 away from 2000, and it was also the resistance area pretty much in the month of July. And not only that, that's where the 127.2% Fibonacci extension is currently located. Do we have further extensions for gold? For now, yes. We are currently looking at a potential for a little bit of resistance or a little bit of a turbulence at about 2000 if price permits, and if the run to safe haven continues, we might actually end the week touching 2000. But if that is not going to be the case, then we have a little bit more wiggle room for gold. That means if price is ending the week below 2000, if we see a little bit of a dip lower on Monday, potentially we might actually be able to kind of identify the potential retracement level, where could it potentially bounce, and in terms of how far it could go. We can still use the 161.8% Fibonacci extension that we have here. That's going to limit gold prices at about 2032. Obviously, if we take a look at the daily, sure, positioning on price, the stochastic is currently above 80, but that doesn't necessarily mean that this is going to be the end for gold, because if we take a look at it on the hourly time frame, we have exceeded the 161.8%. The resistance that we have today, resistance 1, is located at 200% Fibonacci extension on the daily time frame. I'm going to get rid of that, and we don't need this. Long trades been pretty much triggered. This is more or less more of position adjustments rather than anything else. So here's gold on the daily pivots. If we take a look at it, this is on the hourly time frame. The pivot that we have at 1965 was yesterday's resistance 1 at 1965. Now, judging by how far prices could go, we could actually see gold continue to grind higher towards resistance 2 on the daily pivot, and this is the same level that we were looking at, where we might actually find a little bit of a resistance building up at 2000 level, right? And that is in line with the resistance 2 on the weekly pivot. So today's resistance 2 on the daily pivot is exactly the same as resistance 2 on the weekly pivot. What does that mean? We basically have an overlap of a daily pivot and a weekly pivot. So we are also looking at that level where it overlaps, and it turns out to be 2000, which is a very strong psychological level. So I think in terms of limitations to how far gold could run, anything beyond 1985, sure, I think there's a little bit more room to go for gold at the end of this week, and that would be the 2000 level, and that would be for today. Obviously, when it starts next week, we'll provide you with a different outlook on Monday. But in terms of how far gold could go for towards the end of the week here, as you know, we only have a few hours left, one more US session to go, we're still looking at about 2000 as a potential resistance for gold. Now, oil, this one here, we are still good for oil. This is on the hourly time frame. I just want to highlight the hourly time frame first, because we actually have a little bit of a channel in oil. This is XTI, and you can see how price has kind of respected that channel pretty well. So we're still good in terms of whether or not this is still going to be continuing to move to the upside. And if we take a look at the momentum shifting today, we are holding above the pivot level. We are holding above the 89 cents level. And this is a really good indication. If price is able to maintain the position above 89, we are likely going to see that move higher to the upside for oil. And judging by what we have on the hourly time frame in terms of the Fibonacci extension, we're still eyeing for that potential move towards $92 on the XTI here. And if we go with that 92, that is in line with the 78.6% Fibonacci retracement on the daily time frame. So we do have another overlap here. This one here is an overlap from the daily time frame and the hourly time frame. It's overlapping at 92. So we are looking at $92 as a potential strong resistance for oil, especially heading towards the end of the week. And we don't have obviously we don't have a full day left on Friday's trading. So yeah, things could actually change a little bit on Friday. We might see a little bit of profit taking, but just be a little bit more cautious. I think is there room for oil to go? I think there is room towards 92, and 92 might eventuate today. It might eventuate on Monday, but for now, the key level that we want to watch out for is that for as long as the hourly time frame is supported above the $89, we're still open to that potential for US oil to continue to grind towards 92. Now, what about all the other currency majors? We can take a look at the Aussie USD as mentioned previously throughout the whole week. This is not our focus, and the currency market has been pretty much in a flat sideways market. In terms of range, you actually don't have a lot of range as well. The Aussie USD is within 1 cent or 100 pips. The Euro USD is also the same thing. It's just pretty much flat, choppy trading on the Euro USD, the Aussie USD. The Pound USD, we're just moving back and forth between 1.22 and 1.21 for this week. We've got data coming out from the UK, and it doesn't have an impact on those. And the main thing to watch out for with all this sideways market is to take a look at the momentum. You can use the stochastics, you can use the RSI. This one here is flat around the midway here at about 50. So this is an indication in terms of what the market condition is. And lastly, we have the dollar Japanese yen. This one here is continuing to grind forward towards 150. It's just refusing to go down. So we don't know what the reaction is when price hits 150. There could be two potential scenarios. Number one, we're going to actually see the dollar Japanese yen rally up really quickly. It might actually spike up really quickly. This is the same thing that we discussed in the outlook 2 weeks ago in terms of the dollar Japanese yen. So we're still looking at that possibility where it touches 150. It could actually spike up. Or the other version is obviously when it touches 150, we see a lot of selling, just like the spikes that we saw about 2 weeks ago on the dollar Japanese yen. But at this point in time, not really expecting Ministry of Finance or Bank of Japan intervention at this point in time, given the current condition on the whole global economics, number one, and the current geopolitical conflict in Gaza. I think the FX market is currently taking a little bit of a backstage here. The front stage is obviously owned by the commodity market, so we do have that focus by a lot of traders on gold as well as oil, and I think that's where the opportunity lies at this point in time. Just watch out for those key levels that we talk about, and I'll see you guys on Monday with another weekly market outlook.